Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, and it's April 9th. We got a couple economic news releases. We'll start off with the wholesale inventories for the month of February. So, back in January, we had a 0.6% growth where people restocking their inventories. And for the month of February, it subsided a little bit down to 0.5%. So, still not bad numbers right there. It's not a high impact, but just kind of gives you an idea as to if people are getting prepared for more business or not. So kind of future forecast for business. We got the FOMC minutes being released later today at about 11 a.m. here Pacific Standard Time. And this will be the market mover. This is what we've been kind of waiting for. Now, the things that investors are kind of looking for is if there's any language in there, if they may, regarding to the tie-in between the 6.5% interest or unemployment rate and raising interest rates, because there was talk that there's been speculation that maybe they could do it first half, like spring of 2015, when they might start raising rates. But then there's been some of the Fed speeches by different various members that maybe it could be later in the year. They don't expect it to go in later in the year, so they're trying to get some type of forecast, or at least as they've said, read the magic tea leaves to be able to find this information. So they want to read the minutes and see if there's any more insight and give them more knowledge as to when this might take place. So let's go ahead and take a look at the headline news. So far this morning, the stock market's been taking its cues from the earnings reports. So the stock market's so far up. Again, this could change once the minutes are released, and if they find information they don't like or not satisfied with, this could change. But right now, so far today, it's being driven by the earnings reports. So let's go ahead and take a look at what interest rates are doing so far this morning. Now, don't get scared with this huge drop there. You see this big opening gap here in the morning. This morning here we're up at 104.16. Now, the reason for this is that about every once a month we do a bond rollover, and essentially what this means is that this is translated about 27 basis points. So we would normally be up right up in this range if it wasn't for this bond rollover. What happens is that the reason how we get prices that bonds every 30 days, they package up the mortgage-backed securities and sell them off, and they have new pricing and it refreshes. So a lot of times it drops almost between 25 35 basis points, but it doesn't have any bearing on the actual pricing of the interest rate. So just because it dropped lower interest rate, it doesn't mean interest rates lowered. But today I would just take it with a grain of salt, and so we're probably right about the same where we left off yesterday. Maybe slightly worse, because if we look where it would be today, it would be right in this range, and we had closed yesterday at 104.59. So we're probably closer between a 104.35 range in this range. So we probably have a little bit worse for pricing so far. But again, that could fluctuate a little bit later today as we get the Fed minutes released. Alright, folks, hey, thanks for watching. I certainly appreciate it, and I hope you guys have a wonderful day, and we will see you guys tomorrow. Thanks for watching.